Hello everyone, and welcome to the second of our webinars today. I know some of you were with us this morning. I can see your names on the list, so welcome again. And I know obviously the rest of you probably weren't awake when we had our first one. Anyway, wherever you are in the world, thank you so much for taking the time to come and join us. And I assume, can you hear me, David? Yeah, and we didn't do a sound check. We forgot this morning as well. But if he can hear me, I know you can hear me as well. Okay, before we crack on and have a look at see what's happening in the markets, can I just draw your attention to the disclaimer that I know you can see on your screen? As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. Okay, what are we going to do? Well, obviously we're going to see, look at the markets and look at some charts, look at some indices. I'm not sure we've got commodities today, and obviously some stocks as well. And from the perspective of the chart analysis, we are going to be using the concepts of volume price analysis, which is this intimate relationship between the price action and the volume. And for an explanation of what these concepts are, how they work, etc., etc. They are actually in books up on Amazon. I know a lot of people who come along to these sessions have just bought the books. I know some of you have bought our Forex program, and others of you have actually bought some of our quantum trading indicators. And some of you haven't done any of those things, but anyway, into whatever category you fit. Thank you so much, as I said, for coming along to join us today. So volume price analysis, that's where you'll find the details. There is a companion book to that book, and that is that it's got some worked examples, in fact almost 200, primarily this one for indices, stocks. There are some commodities as well. There is a version for the Forex market because the concept, the methodology is applicable across the markets as long as you've got price action and some activity on your chart in terms of volume. You will be able to do the analysis. It tells you where you are in the price cycle, because obviously you'd be surprised how many traders don't know where they are in the price cycle. In other words, are they in a trend or are they in a congestion? Is it a volatile trend? Is it a trend without volatility? Is it a congestion without volatility? But most important of all, once you establish that, you really want to know where it is going next, and that's what VPA will help you do. And this is a schematic that I know some of you have seen already. We've got the volume, we've got the price action. We use candles and candle patterns, very important, and support and resistance. I know I say this every time, but it really is. This is the identification of those areas on the chart where the price is either aiming for, where it is likely to pause, and if it is going to reverse. And once it gets there, this is where your VPA concepts on the price and the price action and volume, and also the candles and candle patterns, it really all comes together. And on top of that, to that chart, you can add your preferred indicators. We've developed our own, particularly for the support and resistance, to help us define those areas. And some of them are price-based and some of them are volume-based, but the best way is to actually see them in action. So I'm just going to pop that down. I've actually got Ninja Trader today, and what I'm going to do is I am first of all just going to have a quick look to see what is happening in the market and just say a couple of words what is likely to happen in August. August is it can be a very strange month for the markets, and not least because it's the summer holidays. I know with the pandemic and the virus, there isn't as much traveling as there has been, but it is still, the summer month. And liquidity does have it does decrease. With the reduction in liquidity, participation, you can get heightened volatility. And by heightened volatility, I mean you can get price spikes. You can get, you can be happily sitting in a move, and then suddenly there will be, there will be a reversal. It's much more prone to that. What we also have to remember about August, now August, when we first started, was literally that. Everyone just went away on holiday, and really the markets, the trading desks were manned by the tea lady almost, as it were, until the big boy traders, and it was big boy traders in those days, used to come back from their holidays, wherever in Hamptons, south of France or whatever it is. But you can't make that assumption anymore. And one of the reasons you can't make that assumption is if you weren't around trading in 2015. 2015 was a really, really scary August because the Chinese stock market took an absolute swan dive. I think it went down something like 8%. Ironically, did actually already have a fall back in June, but it's the August one that everyone remembers. There was a bit of a scare in June, and then it fell again in August, and that was 8%. And then gradually, as I said, it really lasted until about February 2016. And the reason that was given for that was that it was about GDP. Oh, well, China's not growing as much as we thought. And it was just, in reality, it was just a chance to, give everyone a jolly good fright and shake everyone out of very nice positions that had been building up to, as I said, to the June sell, as it were. And there was a knock-on effect. There's always a domino effect when you have such a huge, financial center like, the Chinese stock market. It will have, as I said, you will get this domino effect. Now, what's interesting is we've had a kind of bit of a scare with China already. If you've been following your news feed, you will know that the authorities have kind of cracked down internally on their education sector, some of the tech companies. So we've had a little bit of a wobble already in China. Figures aren't that fantastic that are coming out. Are we going to get a repeat in August? So it's just something to bear in mind. You've got low liquidity, you've got this going on in the background that's already happening with China. You've got the virus, the fact that the economies don't, if the virus isn't brought under better control, then economies aren't necessarily going to open as quickly as everyone wants, basically. So there's a lot going on in the background, as I said, and given that we have August now, we could have a repeat. And what that's going to mean is you're going to get this kind of very sort of stressed markets, and markets are very stressed at the moment. I've got here the Nasdaq, and you can see, it's had this pullback here, this fall, then it, the dip bias came in, but essentially it's moving sideways, and it really hasn't got a clear direction at the moment. Does it mean that it's going to collapse? No, I'm not saying that at all. All I'm saying is that just you have to be aware. And certainly if you're trying to trade the NASDAQ futures today, it's going to be tough. It's only, it's down, it's in a very, very narrow range. It's been in a narrow range since we had this little correction here. We may get another correction. Great for day traders. We don't care whether it's going up or down, but there is a reason why there is this sense of stress in the markets. And if you want to see understand that in more detail, have a look at the VIX. And I mentioned this in our Forex webinar this morning. It's at 20. I know the Nasdaq is moving sideways, but the indices did recover from the last little correction, but the VIX didn't go down. It didn't go down in as much as you would expect for the indices to go up, and that tells us that there is stress in the market. So you've got this stress, you've got these things going on in background, and somewhere on your dashboard, on your computer, just keep an eye on the VIX and look at this number. It's already elevated. If it carries on higher, and the markets are sort of struggling to go higher as well, then that could be a potential signal that, you know, we are going to get another correction, but it could bounce back again, because underneath it all, supporting these markets are the central banks, and particularly, you know, the Federal Reserve. They don't want, you know, they don't want a catastrophic collapse, if you like. Certainly not in the foreseeable future. But that doesn't mean to say the stresses aren't there. Just a couple of other things I can mention to you. Keep an eye, if you're not a Forex trader and you've not thought about using the Forex market to for sentiment, then keep an eye on the yen, on the Japanese yen. If the Japanese yen is being bought, then there is stress in the market. If the Japanese yen is being sold, generally speaking, market is happy. Forex market can also act as a bit of a leader, in the sense that, you know, the Japanese yen might be being bought and the markets is still going up. So you get all these, you can get a bit of disconnect. But generally speaking, if you've got heavy buying of the Japanese yen, then, you know, if it hasn't happened, the chances are, you know, markets are not are stressed out, and they are likely to reverse. And there's another index you might like to consider. I know it seems like we have to keep keeping our eye on so many things, but it's the Kospi. Those of you who have come across it before, it's actually the South Korean stock market, and I did have it up here, but you can get it on, here we are, dearoldinvesting.com. Has everything. It's a fantastic site. The Kospi, it's now, for some reason, these things happen in the financial world. It's now taken as a barometer for global growth. So if the Kospi's kind of doing okay, then the market, you know, it kind of calms down a little bit. It's happy, as it were. The other indices that we look at is obviously the Russell. This is the small cap, the 2000. As you can see, that's not looking particularly, you know, pleased with itself at the moment. Interestingly, I don't know if I can do this at the moment. Let's have a look. The Russell is actually, if I can move this over here, it's in a massive range, actually. If I can go back. I don't really know. Right, I think I'll leave that now, because it's annoying to look at. But essentially, the Russell is the one, again, for risk. That's going down. Market, what's it telling us? Not terribly happy at the moment. And we've got the NASDAQ and the YM. Right, we've got inflation. We've talked about that before. Market doesn't seem to be bothered about it. You know, central banks say it's only transient. Okay, it's just something, again, to be aware of. And commodities as well. If you're trading and, you know, you have access to different instruments and markets on your platform, if you get a day like today, and, you know, it's you've got these sort of, you know, the S&P is down 7. It's, as I said, it's in a very, very tight range. The NASDAQ is in a very, very tight range. If you've got access to other markets, you might like to consider commodities. And I think David's going to talk about copper. David, aren't you? We've got copper there, and its relationship with the Aussie dollar. So I've talked about that. Slowing growth, geopolitical. Yep, got that now. What we've been doing in these sessions, what I've tried to do is put together, it's been a little bit random, so I do apologize for that, because I'm still kind of working my way through it, but eventually this will probably form the basis of a little program that David and I are thinking of putting together. And we've been looking at different ways of selecting stocks from you know, to trade, basically, because unless you've already got your portfolio, unless you've spent the time, you know, filtering through the thousands of stocks that are available to trade, you know, we have to start somewhere. We have to start unraveling this sort of ball of string, as it were. And we've looked at different approaches. We looked at sectors. We've looked at different free sites. MarketBeat is one of them. We looked at FinViz, bar chart, to gather all this disparate amount of information that we can put together. There's a couple of other approaches or other factors to consider. One of them is looking at market breadth, but I'm not going to cover market breadth today because I need to get some more data and some sites so that I can give you that information. But the other one is beta, and beta, in fact, I was going to, it's explained for me here at Market Beat. High beta stocks are essentially, it's a value that is given to a stock, and it's whether it moves more than the index. Now, it's normally, as you can see here, it's normally benchmarked against the S&P 500. But the way it works is, if you have a high beta, what it tells you is that stock is moving. It's moving to this is 4 times the equivalent of the index. And if you are looking for a stock to trade, certainly on an intraday basis, you want something that is going to move. It's pointless looking at a stock that is just it just doesn't have the movement. Regardless of the amount of volume that is going in, it could be in a very, very long term congestion where it's in fair value. The market, there's no clear directions, but what beta measures is this volatility. And the great thing about market beat is it already does the work for you. It's very simple. I've pulled it up. So you go into high beta stocks, and what it also does is, by looking at this metric and pulling these stocks up, you can then go and check out the charts themselves and see what the chart is. We've looked at chart shape. We've looked at is it in a is it in a it could be in a volatile consolidation phase. Is it actually in some distribution? Has it been in distribution and now falling quite, been falling quite fast? Or, is it come through accumulation and it is now going, moving up nicely in a trend? So this is the one you can select. It actually does Canada, UK, Europe, and Australia. I've actually ticked off the NYSE and NASDAQ and all the other exchanges, but you can filter that yourself. Just play around with these. You can also look at, well, actually, I've already done some filtering and I only want this particular sector. So you can you can select on the sector. If you recall from previous sessions, those of you who've come along, and if you haven't, it's on the recordings on YouTube, is when you're looking, well, certainly for investment, but it applies equally to trading. One of the approaches is, well, are you going to look for maybe a reversal? So you look at stocks that are at the top of their sector, or maybe at the bottom of their sector, and possibly look for a reversal there from a trading perspective. Trading, and in particular, it's got so many different approaches. There isn't one approach. I mean, we get emails from people who say, well, just give me one, give me an approach. Well, there are myriads, and it all depends on you, what you're looking to do, your time frame, etc., etc. Anyway, so you can sector. You can also look at market cap. Those that you have to pay for, the ranks, the sentiment, and the ratings. I have to say I'm very strongly minded to subscribe to Market Beat, because I think the presentation of data is fantastic. The one criteria we have actually decided on, or I've suggested that you decide on, is with regard to when you're selecting, and that is the volume. And the volume, I would say, and I think David would agree as well, maybe he's got enough, is actually to look at stocks over 1 million. You can see here you've got some stocks that have high beta, like this is one Water Marine, I haven't looked at the chart, you know, it's got a beta of 3.96 and the average volume is only 77,000. Now I haven't looked at this chart, but I can possibly tell you there'll be gaps all over the place. You'll get sudden little bursts of activity and then nothing. You know, there isn't enough liquidity in that stock. Now, there are traders who like very volatile stocks because when there is a move, it'll move very fast. The problem with a low liquidity stock is if you do get a crunch and the market suddenly, you know, takes a dive, it's, you know, to try and get rid of that stock, it will be taken off your hands, but oh boy, there'll be no demand for it. The market makers have to take it back. That's part of their responsibility, but they will make you pay for it. And in other words, give you as little as possible for it. So, you know, try and stick to, this has got 2.1. As I said, anything over a million. And what I've done is I actually chose two of these. Looking through them, I had a quick look through. One of them was AM. It has a beta of 3.3. What's that? It's called Antero Midstream. And the first thing I've done is actually gone and taken a look at the chart on Market Beat, and I've actually got it on NinjaTrader as well. And I looked at this chart and I thought, do you know what? This is a really nice chart, and it's a nice chart. I know already that it's got, you know, it trades at, you know, there's lots of volume going through, and you can see here, and you know, you can do it. It's the volume price analysis is, you know, it looks good. And I saw this and I thought, oh yeah, that's quite interesting. That's it looks like a sort of a little distribution. Then it had an attempt to rally, but look at the volume is falling, and now it's back, you know, it looks like it's falling again. What I also did, I had a quick look at the monthly chart, and this is a really interesting chart because this came to market, and at $21, it actually went all the way down to $2. You can see there were a lot of very, very unhappy people, I would imagine, at the IPO, and down it went, and it's kind of trying to claw its way back. We've almost got a V-shaped recovery. There are tons of volume coming in, but you know, each time it tried to rise, you know, you've got the volume falling, you have then a pullback, then it's had this attempt to rise. What's interesting is on the monthly is that the volume on that down candle is, you know, it's not as much as possibly one would expect. So is it going to, maybe it's going to carry on down, and perhaps this is now the primary trend for this stock because we've had this V-shaped recovery. So possibly, you know, we are looking at a little bit of a pullback before it carries on higher. But this is just to put the price action that we're looking at on the daily chart into a broader context. But certainly this is the, you know, I would say this is a sort of little distribution down. You can see the volume on the up candles. It's, you know, it runs out and then down. So what's going to happen today? We'll go and have a look at NinjaTrader. And with Market Beat, you can do all your other research. You've got the institutional ownership. There's people been buying it. Well, this is the buying that came in on that V-shaped recovery. Look at the short interest. Is what percentage of the float is shorted? 3%. It's, you know, not massively high, but there is some short interest there. Earnings, really important. We're in earnings season at the moment. When have we got Q1? No, there's nothing coming up here that I can see. So you do all this other kind of background stuff, you know, get to know it, get to know the you know, the background to the stock. The other one I selected was CPG. CPG is actually got even lower beta, which is only 2.97. This one, CPG, Crescent Point Energy. It's interesting, they're both energy companies. The other one is to do with oil and gas, and you think, well, there is a green revolution coming, and are people going to bail out of more traditional fuels such as oil and gas, as it were? So there's all the kind of politics behind that as well. And look at the oil price. Is that going up? So you've got to look at the related market aspect of that. But CPG as well, again, a really sort of, the volume profile confirms what we, what the metrics tell us on the back here when we were filtering it. We've got CPG, where is it? It's gone, disappeared. 2.97, 2.9. Here we are. Yes, average volume is 3.8 million. So it's a stock that it's got a lot of participation in there, and yeah, there's a few little gaps here. That's fine. It's okay. The volume came in there, gapped up, didn't go any further, a bit of sideways. Then you've got this this sort of little waterfall coming. You've got falling prices, increasing volume. This is an interesting candle because you've got a lot of volume coming in here, but look at the little squishes. It's quite a small candle. If that was going to go higher, you'd expect the candle to be taller, to be bigger. And when you have volume like this and this kind of volume profile, it makes understanding VPA so much easier. Then we had a bit of a gap down. We then have the support coming in, but boy, oh boy, it's been a real effort. It hasn't really gone, for the amount of buying that's gone in there, hasn't really gone that far. It's gone, well, from $3.09 to $3.61. I don't know what this has fallen down from. Let's have a look. Yeah, I mean, at its height, I mean, if we look at it, it was $48. Now, what's interesting about a stock like this is a lot of, certainly investors would look at it and think, well, this stock was $52 at one point. Oh my gosh, it's $3 down here. It's a bargain. It could be. On the other hand, might not be. There seems to be a lot of buying coming in now. What does it do? Again, it's an energy stock. You can go and have a look at the profile. And it's one that, as I said, because it's got this nice beta value, and it's got the volume in there, and it's got some interesting VPA aspects in the chart, it may be one that you would like to think, do you know what? That might be one to consider, as it were. It's gone past the earnings. It's 29th of July, so you're not going to have any problems with the earnings. So that's doing the research on Market Beat. And then what I've done is actually I've brought it here to this is the 5-minute chart for AM. As I said, we were looking at that on the daily, and I thought that was a really nice sort of little. There we are, a sort of little distribution. If you remember, this one too was a very high value stock, and we can see this with our quantum indicators. It's this was the cap. This was the move higher. It was off this volume support here. We've got a sort of two bar reversal, a bit of a really messy trend higher. I can't say that it's a nice looking trend, but I'm interested in this point here. It can't actually get beyond. Whatever is it here? What is it? Let's have a look. Let's move this out of the way for a second. Move my. There we are. Can't seem to get beyond the $10 mark. I think that's the no. Is that $10? $10.60. You can see here we've had testing. This indicator here is what we call the accumulation and distribution indicator for NinjaTrader. There's an equivalent one for TradeStation and TradingView, David? Yep. And TradingView. And the difference within this one and the ones for MT4 is this line actually gets thicker. So every time it's touched, the price approaches it, it gets thicker, and that tells us that it becomes much stronger. And when it becomes stronger, at some point it's going to come down. And what it came down to was actually the volume point of control. Here, this is what we call the sort of value area, and this is at $10. $10 seems to be the sort of a bit of a sweet spot for this particular stock. I would say that was like a distribution. It certainly went down, and it kind of, certainly the buying came in again. The volume is not the way the volume is displayed on NinjaTrader, it's slightly, it's kind of been distorted by this volume over here. So the volume profile on market beat is a little bit clearer, as it were, but we certainly had the buying come in here off this support platform here. If you look at the thickness of this line, didn't support here because it's very thin. It actually had a whole bunch of volume support. Sorry, just to go back to this point here, we have price-based resistance, but we also have volume-based resistance. This is off the volume point of control. You can see here it was touch, and down it went. This actually held, pushed it back up, as we can see. The volume is, as I said, it's a little bit distorted. On the up candles, if you can have a look, these two little bars down here, they're not fantastic compared to the range of these candles. So the feeling is, well, it's not going to go very far, and it's gone straight back into the VPOC, and you would expect a little bit more sideways. And you had then another big candle with not a lot of volume, and in fact it actually then broke away. But you know, again, the volume is, I would say, kind of consistent. These tails to the bottom of the candles haven't really done anything for this particular stock, but within that candle, it's a decent range. Certainly on the 5-minute chart for day trading, well, that would be fine. Because the other thing about beta is this, is that because it's moving, you know, more than the benchmark index, when you get a daily candle, you've got a nice big wide candle. If you're down on the 5-minute chart here, you've got a half decent move. You know, it's gone from where is it, $9.40, and it went down to $9.05. You think, well, that's not very much. But actually, you know, if everything is very compressed at the moment and in very tight range, that's actually a really, really nice move. And this, I've got the Camarilla on here. This is another price-based indicator that we've developed, and certainly the that's moved. I think that was from yesterday. It's as from that was yesterday, and now this is updated. This is today's. But a break, the R3 and the R4 are certainly really, really important. So we have this really nice waterfall back at the volume. This is the volume point of control. This is the usual volatility that we get at the open. What have we got here? We've had some decent volume gone in, but it's on the, just watch the up candles. The overall bias to this is to the short side, and I think you know, there's really not enough to be pushing that, you know, for a decent reversal. And if this is going to carry on higher, which it may do, I think it will pause definitely here at the R1. If it stays between the S1 and the R1, then we're just going to get congestion for the rest of, you know, for the next few hours anyway. So maybe revisit it at the end of the day, and that will set us up for tomorrow. And if it does manage to get through here, I don't think it's going to get much beyond the R3, and I certainly don't think it's going to get much beyond this level here, because look at the strength of that resistance that we have from the accumulation and distribution indicator. To the short side, certainly if we get some decent selling coming in and we get beyond the S1, then possibly back down to the S3, and certainly retest today's low, basically. So an interesting stock, the selection of which is purely based looking at beta, the beta value, to give us, I think, those elements that you need to be able to trade safely. As I said, you need volume, you need liquidity in a stock for trading. You know, the whizzy stocks are fantastic. You know, oh great, they're making these great big moves, but really, when there isn't the liquidity there, you could get very, very badly burnt.
Okay, hold on one moment. I'm just going to, we're just switching data feeds here. Hold on a minute. I'll be back with you in a mo. Okay, no problem. Brilliant. Right, thanks, darling. Good to be with you. And I just thought we'd start with, sorry, just adjust that a minute. Let's just start with where we are with the primary US indices. I've got the YM, the NQ, and the ES strung out along the bottom here. These are on the daily. And then at the top of the screen, I've got the 5-minute equivalent. So basically, you're looking at where we are intraday. I wouldn't say there's divergence today. There has been, as many of you know, come along regularly, there has been quite a bit of divergence, particularly between the NQ and the other two. NQ's often been leading the way. YM and ES have been lagging. It's kind of reversed at the moment. It's quite odd. This is let's have a look at the YM. That's the YM on the daily. You may not be able to see it, but that's where we are trading at the moment, literally on a long-legged doji. We've got a bit of price-based support there on the accumulation distribution below, bit of resistance above, and it's actually oscillating between the two, believe it or not. I'll just move the chat box out of the way. There we go. So that's where we are. I mean, yesterday's price action hardly looks strong. You've got big wick to the upper body, decent volume there, not huge, but decent volume. That's fine. We expect it to be slightly lower than normal in the summer months, particularly in August now. It's just building this platform here of resistance at the top that it can't seem to break through. It is fragile. I wouldn't say it's weak, but it's certainly fragile at the moment. In terms of the NQ, where are we on the daily? Had a decent amount of buying coming in here, but it didn't really follow through. Tried to follow through here, and you can actually see we had quite a lot of volume going in on this day, and then the following day, the volume falling away again. Bit more buying coming in here on support. Bit of weakness yesterday, not looking terribly strong. Again, not moving strongly. And there's a very similar picture on the ES on the daily chart. Got a couple of pivots at the top here, up at the top of the volume point of control. Again, building levels where it's really struggling to break through. So that's the kind of picture. It's very, call it very toppy at the moment, the markets. In terms of on the 5-minute chart, in fact, let me go on to, let's pull them up just individually. This is on the YM. Very strong level of resistance here on the accumulation distribution indicator. For those of you who have it, you'll know how it works. Basically, it presents those levels which have been tested repeatedly. Thicker, it thickens the line so you can see instantly where the heavy areas are of support and resistance, where it's less pronounced. This is extremely strong. You can see how it capped off this move here, holding the price down, constantly bashing into it, trying to get through, can't get through. And of course, the volume down here as we get into 2:30 our time, as the cash and the electronic open up, but together, this is perfectly tradable. I know the volumes look very small, but that's because you've got obviously this huge in-rusher volume which comes in when the cash markets open alongside Globex. That's just a fact of life. And we're now comparing all the volume in here. This is what's gone on electronic timeframes. So that's where we are. That's where the volume of resistance is holding. Now we're trying to break back higher. You look at the volume profile here. We've got volume falling, market trying to rise. We've got a volatility trigger here. Now it's got to try and break through this level here, which is, again, a pretty solid level of price-based resistance. And you also got a cluster of 2 or 3 more up here as well. In terms of the 5-minute on the NQ, similar-ish. Very strong level of resistance up here at 990. And the move higher you've got, when you start looking at VPA, you start looking at some of the nuances. For example, this widespread candle here, you look at the volume, okay, it's a little bit higher than this, but you would expect some, certainly in terms, if that's your benchmark, if you like, and you say, well, okay, that looks about par for the course. This looks a little bit lightweight in terms of volume. I would expect it to be up here, sort of this sort of height, and it's not, it's down here. So it's kind of giving you a signal that, maybe this isn't going very far. You've also run into some minor price resistance there as well. We're now trading around the volume point of control. So until it breaks away from the volume point of control, that's where it's going to sit for the time being on that sort of time horizon. The same is true of the ES. We're coming up to the volume point of control, which is sitting here, heaviest concentration of volume. So the price is not really going to do anything until we get some decent volume driving it one way or the other. Huge amount of volume sitting at the VPOC. Don't expect much in terms of anything else other than congestion. Let's go over on to the multiple time frames. There we go. And I'll take a whiz around the commodities as well. Okay, this is where we are. This is on multiple time frames now. I've got the YM up here. I could pick any one from three, but I happen to have the YM. Just to give you a heads up as to where we are in terms of, let's pull trading view over. There we go. This is what's going on in terms of the currency indices. So in terms of sentiment, that's the yen. Very strong rally. That's why, it's starting to come off. So if this is starting to come off, then if that is continuing, then we should expect to see indices recover a little bit from all this hammering they've taken in terms of that particular move earlier on. That's the dollar. Let's pop that up full size. There we go. Decent buying of dollar. That's starting to come off and weaken a little bit as well. Obviously, if you've got dollar buying and yen buying, it's not great for indices. You expect the indices to weaken quite dramatically. And they're always indicators of sentiment when you look at the currency markets. Okay, let's say this is the YM. This is on, I've got 15-second, 1 minute, 3 minute, 5 minute, 10 minute, and 15 minute. 15 seconds a chart I use a lot because I like to see what's coming up from the fast time frames into the 1, 3 when I'm scalping these markets. Let's just pull these up, take a closer look. This is on 1. Decent move going on. What have we got ahead? We've got through this very strong blue line here, which was acting as resistance at this point. Now it's acting as support, of course. So we've now got it below. So we've got a decent platform of support in. The trend monitor's transitioned through here into this trend higher. We've got some transitional colors here. As the market started to reverse a little bit, the trend monitor starts to think, is this a change in trend? Is this going to reverse to bearish? We get a darker red, but then it comes out the other side and we're maintaining blue at the moment. Just testing that level once more. To the upside, obviously, we've got volume falling away on the volume point of control histogram, which is positive news if we're looking to take a long on this particular position. Let's go down, look at some of the other time frames. Let's have a look at the 5 minutes, see what's going on there. Again, this very, very strong level. If we were going to take a trade on this to the upside, and I mentioned this in the VPA forum the other day because there was a lot of chat about support and resistance and how it was all about risk and reward, and whether Anna and I actually buy into this philosophy of going and opening a position and saying to yourself or the market, I have to have 2 to 1 or 3 to 1, whatever it is. We don't look at it that way. The way we look at it is it's from a chart perspective. If you were looking at taking this opportunity, the question you've got to ask yourself is, what have I got on the chart that is going to hinder progress for this particular position in this particular time frame or closely associated time frames? And if you just take this chart as an example, we've actually got 100 points here, which is a big move, obviously, but you can imagine this being much closer. In terms of what is going to cause us problems or potential issues, the positive side of that, of any move to the upside, is that the volume here is falling away and we get into a really nice low volume here up at this level. So as we get away from this volume here, as we start to move higher, volume acting as resistance becomes much less of an issue because it's falling away so dramatically. So from a VPOC perspective, it looks fine. Absolutely no problem. And once you get past this level here, then it really does drop away dramatically. So volume acting as resistance is positive in terms of a move to the upside. What's less encouraging is that you've got all these levels here, all these price-based resistance levels. Now, individually, you can see that they're all quite minor because they are all relatively thin. You may not be able to see the numbers here, but they're mainly 1s, 2s. This is 5 that we're actually testing at the moment here. This blue level here has been tested 5 times. You can see how it's holding the price down here. Now, if we get through there, the next one is at 3, and then we've got one at 2, and then these are all 1s and 2s, so not so bad. The problem is that even if they in their own right, they are relatively minor, but when they start to cluster together in this way, they become more important, they become more significant. So you're looking at it from the perspective of price-based resistance, volume-based resistance, and what is the volume doing down here? In terms of the potential opportunity, is this a trade that I'm going to take? What is in the way of that trade that is going to cause me difficulty in terms of going higher? We go up here. Oh, this is on 15-second. We're now moving through the top of the VPOC. So the volume here is very lightweight. Let's go up to the 1 minute now. In terms of 1 minute, this is looking pretty positive. In fact, this is probably a better example. If you look at this now, the volume here has fallen away dramatically from this region where we had the blue resistance, price resistance, and also we had a lot of volume building there because we were in congestion for a period. This has now fallen away dramatically and then continues to do so. So as the price moves up here, this is looking pretty good. There's no price-based resistance, which is going to cause us a problem, and the volume is falling away neatly as well. So, taking that all on board, you say, yeah, that looks fine, quite happy with that, quite happy to take that as a scalping opportunity because there's very little in the way that is going to cause an issue for me in taking my 5, 10 points, pips, whatever it may be out of the market. And that's the way we do it. It's very simple, very logical, but it's based on the chart itself. It's not based on some theoretical value that I, as a trader, have to have as a risk-reward ratio. And that's what we always say. That's what we cover in detail in the education program. It's as simple as that. On to 3 minute. Again, pretty self-explanatory. What have we got in terms of price-based resistance? Very little, actually. We've got one here at 1. We've got one here at 2, which is literally just being tested now. Trend monitor is nice and blue, which is great. Decent volume under that last candle, nothing particularly to scare the horses there. So we've got nice volume, nice up candle, little wick to the bottom, not much to the top, nothing to worry about there. If we get up to anywhere near 2025, then the volume starts to fall away very rapidly. We've got a minor level here, but it's individual, so it's not going to cause much difficulty for anything that's got some momentum behind it. And then up here, as you can see, very, very little volume here. And that's the other counter side to volume, if you will, acting as support and resistance. When you approach these regions, as indeed here, you should expect the price to go through here pretty rapidly, pretty easily, knife through hot butter, because there's nothing in the way of volume there to cause it any difficulty. So you're using the volume point of control histogram not only to find out where your VPOC is, to consider trading breakaways which are confirmed with volume, as they were here, but also to use the histogram itself to help you once you're in a position and looking at an opportunity, and as it approaches a low volume area like this, to expect that particular price to move through there very rapidly, A, because there's no volume there to resist it, and secondly, because if the market, and this is a slightly more nuanced issue, I guess, but if the market didn't consider it an important area in the past, why would it consider it an important area now? And that's more of a semantic argument, if you will, but that's the way we approach it. And then, of course, as we get up to this level, we've got this hugely significant region here, which is going to come into play at some point if we get that far. So see what's going on 15 seconds. And you can see what's happening in terms of the trend monitor, which is such a powerful indicator, because when you're using it in multiple time frames, I know we have a lot of customers here, I've got a lot of students on the call. When you're using the indicator, please use it in multiple time frames. Don't use it in isolation. This is the correct way to use it because you will see what's coming up from your fastest time frame into the next time frame, into another one, and it's starting to transition here from what was bearish into a darker red. That may well come out into straight through into blue, or it could go into a light blue and ultimately out the other side if this trend reversal continues. And in terms of looking at it on this 10-minute chart, if you are upstream on a 5-minute chart or a 3-minute chart, and you're looking at this, this doesn't look great. Why? Because you've got a lot of volume sitting here. You've also got one extremely strong level of price-based resistance here, and you've got another one immediately below it. So for the market to move through from 800 to 820, once it gets to 820, this is a 10-minute chart. Expect the market to pause at that level. So if you're on a 5-minute chart and you're not looking at a 10-minute chart and you're wondering why the market's paused, that's your answer, because it's hit a level on a slower time frame. Because time carries weight. It doesn't matter what you're looking at in terms of an indicator. The significance of time is all important, because what happens on a 10-minute time frame will carry far more weight than what happens on a 1-minute time frame or a 3-minute time frame or a 5-minute time frame. And it doesn't matter whether you're looking at support and resistance, whether you're looking at volume, whether you're looking at indicators, whatever it is, that is a de facto standard. And it's just a written rule of trading that time carries weight. And it's why trading multiple timeframes is so important, because when you're looking at these things and you're wondering, you're stuck on a 1-minute chart and you're wondering why something's happened, if you go and look at a 3 or 5 or a 10-minute, it'll probably give you the answer as to why it has stopped or paused or reversed or whatever it may be, whether that's from a volume perspective or whether it's from an indicator perspective. Simple as that. Let's just go and have a quick look at commodities. This is copper. So the daily chart, just move that out of the way. Daily chart for copper has been very bullish. Has come off of late. The interesting thing with copper is that we are trading back around the volume point of control. So, you know, we had the rally, we had this nice rally. Yeah, we've got rising volume, but in terms of where that price action was going to run to, it was almost certainly going to run back to the VPOT, which it did. It's come back here. We've gone into congestion and looks like we're coming off again. So from a rallying perspective, you know, it hasn't got the, in terms of looking at it from the perspective when this is actually occurring, and it comes back to this issue of where is this, how far is this move going to take me, whether you're looking at a daily chart or a minute chart. And again, it's exactly the same principles. You're looking at it and thinking, okay, well, I've got a VPOC up here. It's probably not going to go that far. And, you know, it's just going to run out of steam at that level. Similar sort of situation in terms of oil as well. Just go down onto the WTI. Drop that out of the way. There we go. Again, coming off this, we had this very, very extreme volatile day. Ton of volume coming in. We get the volatility trigger. What are we expecting? One of two things, congestion or a reversal. And in this case, we got a nice reversal. Volume comes in the following day, lots of buying coming in, and on up we go. But what you're seeing is another classic example of VPA in action. We've got falling volume, rising price, and you know where it's going to go to. It's going to run to the VPOC. In fact, I think we did a post on this last, where are we now, Tuesday? I think it's probably last week. And basically saying, yeah, oil's going to consolidate around this region now. It's not going to move very much one way or the other. It's going to be trading in a fairly tight range because we're at the volume point of control. And it will only move away from there once volume, the bulls or the bears take control of the market. And that's obviously signaled through the prism of volume. It's as simple as that. The VPOC is like, it's the fulcrum of the market. You can imagine it as a seesaw. You've got two people of equal weight on the seesaw at that point. So there is no bias to one side or the other. At some point, one of those participants gets off, someone lighter or heavier gets on, and then the fulcrum is no longer in equilibrium and it moves. And that really is the principle of volume point of control. Obviously, it is through the prism of a volume, and volume is the effort which drives the market one way or the other. But at the VPOC, price agreement's been reached and there is no real bias one way or the other. That's on oil. Oil has been, as I say, pretty bullish. We've had a lot of, we've had, I think, something like 8 or 9 consecutive draws. I think we had a build last week or the week before, which really interrupted the run of 7 or 8 draws consecutively, which was really helping oil. We are in the US driving season, so you know that's another big demand for oil. It's always a factor to play in. But that's where we are with oil at the moment. In terms of gold, gold's really struggling and has been for some time around the $1,800 an ounce mark. Let's move that up a little bit. There we go. Currently at 1813. Really struggling. This is on the monthly. Let me just take that down to a different time frame. Just drop that back again. Let's just take that down to, let's go to the daily. There we go. This is where we are on the daily. Really, again, we're trading around the volume point of control. So it's in congestion. It's not going anywhere for the time being. It will only break away once we get a strong move supported by volume to move away from that particular range. And that's just the way it is. And the same is true also of silver, because the two tend to go hand in hand. That's where we are with silver at the moment. That's on the daily. Similar sort of picture, not actually at the VPOC. The other aspect of the volume point of control with the accumulation distribution indicator is that you tend to get, when you get these channels building around the VPOC, you also get these very, very strong levels as a result, because this is being tested constantly to the upside, tested constantly to the downside. So the accumulation distribution indicator builds these levels as well. So you get this terrific channel of price action. And once you've got that channel of price action in place, if you're a breakout trader and you want to trade breakouts, breakaways, it's fantastic, because you've got such strong levels in place. Once the market does indeed break away to one side or the other, you've got so much protection to place a stop loss to the upside, to place a stop loss to the downside. It's just a great way to trade. The downside of it is you have to be patient. You have to be patient trading breakouts. It's as simple as that, because if you're not, then it's just not for you. It's not for everybody. But of course, congestion builds on all time frames. It can be on a 1 minute chart, it can be on a 15-second chart, it can be on a monthly chart. So you're not restricted necessarily to, obviously, to the slower time frames. The principles of trading are all the same. We're just looking across to see what's going on in terms of the yen's kind of going sideways now. The dollar's going sideways at the moment. Euro's selling off quite strongly, and pound's going sideways. So probably quite. Let's see where we are in terms of where were we? Here we are. There we go. That's where we are. So it's kind of run out of puff. No great surprise. Just pop the 10-minute open. There we go. It's just it's just run out of puff there. We've got some very strong price-based resistance there on the 10-minute, which is hitting that one as well. And we've got a lot of volume sitting in here, and really only lightens once we get through this level. So it all looks a bit fragile at the moment, not particularly strong. But in terms of the dailies, as I say, which is where we started, there we go. No, we're still trading this very, very narrow range, trying to trade, this channel here. The NQ's come off a little bit, and the ES is just, mildly negative. It's all very, very, very weak. And if you're going to trade these sorts of time frames, if you're going to trade these sorts of markets where it is a little bit more congested, there's no clear, strong trend, then you have to go down. You've got no choice, but you have to go down onto the faster time frames. There are trades there on 15-second, for example. There's certainly trades there. This doesn't suit everybody. It suits me, but it doesn't suit everybody, which I know full well. But if you're going to trade and you need to trade, you have to trade, you have the desire to trade in these markets, then you're going to have to step down onto these fast markets. There are trades here, but you've got to be very, very quick, and you've got to know what you're doing, and you've got to have everything set up pretty much automated. The orders constructed in such a way you just click one button, automated straight through with the associated stop on, probably a fixed stop, which is just trading in and out all day long. It's almost automated trading. It's definitely there, but it doesn't suit everyone. You can see how this market's come up here. The price just come up, test this level here, very strong price-based level. Little low volume node ahead of it. Just see if we get through that, but that's the reason it stopped there. Come off there. Let's have a look at the volume. Volume was okay. Let's see what we've got in the volume here. It's okay. Now we've got a 2-bar reversal there. If you overlay that candle on this one, you've got an up thrust. So, it's looking a little bit weak. Don't really want to see that. You want to see it break through there if it's going to carry on higher and up to 88.10. Just see where we're going. Just see if we can get a break away from here before we wrap up. And it's all about levels. It's all about levels of volume. It's about levels of price-based support and resistance. And it's about what's going on down here as well. Okay, higher volume on that one. So, volume's rising a little bit. It's not dramatic. It's not a price waterfall. And bear in mind, we've got a little platform here, which is pretty strong, which is going to come into play in a minute if it carries on lower. So we've got 68 down to 60. If you were taking a short here, then yes, the volume's falling away, which is fine. But this is where it's going to pause. Just see if it does. Okay, it's gone straight through, fine, that's okay. But the volume's not great on that particular candle. Look how the volume's fallen away. So it's telling you it's weak, but there's not heavy selling coming into the market. The volume here is too lightweight. That candle there, if you compare that candle with this volume, and you compare, let's say, that candle with this volume over here, this volume is higher. It's all about quick comparison. You might think, I can't do it that quick. Well, all I would say is, if you've got Ninja or if you've got a trading view, you've got seconds charts there. If you want to learn VPN, do it real quick. And if you do it in a fast time frame, it'll make it so much easier when you're doing it in a slower time frame. You pick all this stuff up very, very quickly. And you just have to learn one thing at a time. You look at candles, candle patterns, you pick up things like overlays here. You're looking, obviously, at the indicators at the same time. You're checking on, levels here, looking at the volume, comparing it with what's gone before. Where are we in, what's going on in slower time frames, et cetera, et cetera, et cetera. We're just looking at one at the moment. This looks like it could break through here. If it breaks through that level, you've got the volume falling away here, which is very nice. But it hasn't got the volume at the moment. That one was okay. See what happens on the next candle. And in terms of trading from a VPOC as we are here, it's a question of setting the level that you're comfortable with in getting in terms of, where am I going to jump in? What's my comfort level? Where do I think I will be comfortable opening a position? You might look at it up here and say, okay, well, we get from here to here. If we get through that, then, yeah, I'm quite comfortable with that. If we get down the bottom here, do we want to have a breakthrough here? If we get through that level, am I comfortable jumping in at that point? I'm down at the histogram on the VPOC. That's fine. Just have a look at the 1 minute, see what's going on there. Got a very strong level of resistance overhead here. Any move to the downside on the 1 minute time frame, I'd be looking at this level, and I'd be looking at this chunk of volume in here, and I'd be looking at taking something out in here before we hit here. So we'd be looking at what, 20, 30 points maybe in here. This is on the YM, so if you're on the mini YM, it's $5, so that's $150, that's not bad. If you're on the big YM, it's obviously 5 times that because it's $25. But that's the way I'll be assessing it the whole time. Be looking at this, say, yeah, okay, fine. Quite happy to go short below there if it breaks that level. Yeah, this looks great, but then we're going to hit something here. So I'll be looking to get out by then if it goes that far. And certainly it won't be down here because it's, absolute surefire guarantee it's going to run into congestion at that level. So there we go. Sorry, run right over time, ranting on as usual. Let's just move that out of the way. There we are. Very quickly, where can you find all the bits and pieces? This is Quantum Trading, quantumtrading.com. That's where you'll find all the indicators. Be mainly on NinjaTrader 7 and 8, rather than NinjaTrader 8 today, but also TradeStation. I've got TradeStation down here. Didn't pull that up today. Very quickly, there we are. Just get that up if I can. There we go. That's the NQ. That's the Nasdaq. That's on what have I got that on? That's on 1 minute. This is on TradeStation 9.5. This is TradeStation Global. So this is using Interactive Brokers. I've got the Interactive Brokers account linked through to this, and this is driving it. So I've got time of sales going through here, as you can see on Globex. So this is giving me all the contracts, contract sizes, whether they're going through at the bid, below the bid, above the bid, at the ask, whatever. And I'm looking for big size. I'm looking for anything beyond 100 down here. Certainly 70, 80, 100 upwards. This is all noise level. What I'm looking for is the big numbers down here, and I've got the radar screen up here as well. So that's TradeStation 9.5, and also we have TradeStation 10, version 10 and above, which is driven by the traditional TradeStation data feed, which is fantastic. Both obviously have radar screen as well, which is immensely powerful for scanning, particularly for stock scanning. You can have up to 1,000 instruments or 1,000 charts on the radar screen, so it's immensely powerful. And we've got MT45, NinjaTrader 7.8, TradingView and TradeStation. And in terms of the indicator, if you buy just one indicator, if you buy a group, we will always give you credit for that. If you want to upgrade to the full package, you maybe start with, a lot of customers start with one just to see what we're like, try the indicators. You are then able to upgrade to, if you decide to upgrade to a full package, fine, we give you a credit. If you want to upgrade to maybe a part package, we give you a credit. If you want to upgrade to the education program, we give you a credit. We've always done that and always will do. So you never lose out. If you want to move from platform to platform, no charge. We don't charge like other companies do, which I think is disgraceful personally, but there we are, it's only my personal opinion. The only thing you pay for is there a difference in price between the actual packages. TradeStation is the most expensive because it also has the radar screen equivalents as well. But if you were transferring between MT45 and TradingView, for example, it's the same price. So you don't pay anything. We just transfer your indicators across. They're all equivalent, and on you go. That's how we work, and it's how we always work. If you invest in the full package, you also get all future indicators. I mentioned it this morning, we're just developing an indicator on TradeStation, which is going to be a little sort of radar screen equivalent to run some of the indicators in. That should be launched in the next sort of month or so, if not sooner. Once we've done that, we're actually going to move over to NinjaTrader 7 and 8, and we're going to be developing a bunch of volume-based indicators specifically for stock trading. And we're also going to be developing the radar screen equivalent there on NinjaTrader 2. So there's going to be a lot of work going on NinjaTrader 7 and 8 in the next few months with the development team. So that's where we are. That's where you'll find all the indicators. This is a Forex program. I know we've got some students on the call today, so it's good to have you here. It is the complete Forex trading program, and believe it or not, we have a lot of stock students on this program now, because the world in general has now appreciated that the Forex market sits at the heart of the financial world. Because if you think about it, when assets are converted into cash, if you're moving from commodities into equities, or from equities into bonds, or whatever it may be, you're moving from high risk to low risk or whatever, that asset has to be converted to cash at some point, which tends to move through the Forex world. And that's why the Forex market sits at the heart. And that's why sentiment flows are so important through the Forex, the hub of the market. So we do have a lot of stock students on this because they understand that understanding relational analysis, which is this one, really pulls the whole thing together. Whether you're a stock trader, a Forex trader, whatever it is, bond trader, you need to understand the sentiment, what drives these markets, because it's about only one thing: risk. Risk on, risk off. Is money chasing higher risk for higher reward, or lower risk for lower reward? Simple as that. That's all it's about. Nothing else. It's very simple when you boil it down to spare essentials. So that's the program. We also have the funded Forex program. That's where you trade our money up to $2 million. So the risk is on us, not on you. And finally, Anna's site, annacouling.com. That's where you'll find all the posts. So I think we did a post on oil down here somewhere or the other. Can't remember now. Anyway, you're more than welcome to go and have a look at that. And you can find all the books on Amazon in Kindle and also in paperback too. That's it. Thank you very much indeed for coming along today. Hope you've enjoyed it. Hope you've learned something maybe you didn't know before. We will be back. Not sure we'll be back next week, probably the week after. We're kind of doing these every other week now. But keep an eye on your emails, and you'll always get notification of when the next webinar is. So enjoy the rest of the trading day. Have fun, stay safe, and we will see you again soon. And bye for now.